and I will try to go slow enough so that I don't confuse too many people. And then also the other thing I just posted was that I also do the S&P futures in the end of day updates along with the trading room. Now in the trading room, what I'm mostly doing is S&P futures, and then the rest pretty much stock setup. So if you have any interest in that, you can let me know. As far as what I want to go over today, it's using Fibonacci time and price. Now, if you like what you see in this presentation, you may want to consider getting the book because everything is explained extremely well in the book. The book is McGraw-Hill, Fibonacci Trading, How to Master the Time and Price Advantage. It's something that authors, we do not make a whole lot of money on the book, but it's definitely a something to put out there as far as a manual and something that you can refer back to if you like any of the concepts that I talk about today. Okay. All right, so I'm going to start with what I'm going to show you today, and that is 3 different high probability trade setups. The first one is called a Fibonacci price cluster, which is the coincidence of at least 3 or more Fibonacci price relationships that come together within a relatively tight range. Okay, and these clusters identify key support and resistance decisions. Now, typically, you're going to want to use a price cluster in the direction of the trend. You're going to have a whole lot better luck, let's say, if you're in an uptrend and you set up the buy clusters for the buy entries to be in direction of the trend. If you try and set it up the other way, the odds are not really with you, okay? The second type of setup that I will show you some examples of today is called a symmetry setup. Symmetry is defined as the similarity or equality of swings in the same direction. It's also called a measured move. So I'll be showing you examples. For example, let's say we have a nice uptrending market. I'll take the prior declines within that uptrend, project them from the most recent high to look and see if a new swing or correction is similar to one of the prior ones. Okay, and it works more often than not. So it's something you should definitely watch. And then the third type of setup that I look for every day, it's not quite as common as either the symmetry or the price cluster setup, is a 2-step pattern setup. It's pretty much still a price cluster trade, but it's within the context of a zigzag pattern. And it's a little bit complicated to explain, but there is a whole chapter on it in my book, and I believe I do have an example here in the slides. Okay, to start with, as far as the ratios and price relationships that we're going to look at, I pretty much use 382, 50%, 618, 786, 100%, 1.272, and 1.618. For confirming ratios, I will run occasionally 236 if it's a really large swing, and 2.618, which I run mostly for my third target on any of the trade setups. Okay. Now with those ratios, I run retracements. For the retracements, I'm using this first set of ratios. Okay, that's where I'm going to measure a prior low to high swing or high to low swing and use these ratios to set up possible support or resistance. And then as far as price extensions, these are essentially retracements beyond 100%. You're typically using the same exact tool in whatever program that you're using to create these, because you're still only coming from 2 points. So I'm going to measure a low to high and extend downwards 1272 and 1618 for possible support. Or I'm going to measure a high to low swing and extend upwards beyond 100% using those same ratios to look for possible resistance. The last type of price relationship that I use is what I call a projection. Okay. Now the only problem with this is that the other programs call the tool an extension tool, and it does not matter what the tool is called. It just matters that you use a 3-pointed tool to run these projections. So here, this is where I'm taking a prior high to low swing and projecting it from another high using 100% mostly and occasionally 1.618. Or I'm going to measure a prior, low to high projected from a new low. All right. So basically, taking all of these price relationships on a particular chart will create the trade setups, either a price cluster setup, a symmetry setup, or a two-step pattern setup. If you see a setup in the market and you see a trigger for an entry, you take the trade, okay? If you see a setup and there's no trigger, stand aside, okay? There are tons of these setups that will get violated every single day. So in order to filter out the ones that are not likely to work, that's why we use trade triggers. Okay, so again, just to review, as far as Fibonacci price retracements for possible support, I'm going to run the low to high swings and then retrace using these ratios down here for possible support. Or I'm going to measure the prior high to low swings and retrace using the same ratios for possible resistance. Okay, you're not going to look at or use every single retracement level for a trade. What you're really going to do is ideally look for the clustering of these price relationships from different swings. Okay, and as we get to some of the trade setups, you should be able to understand more of what I'm talking about. As far as the Fibonacci price extensions, okay, you're still only using 2 points. This is where I'm measuring the prior low to high swings and extending downwards using 1272 and 1618. Or I'm going to measure prior high to low swing and extend upwards using the same ratios, 1272 and 1618. Okay, so if you're running the low to high, you're looking for support. If you're running the high to low, you're looking for possible resistance. Okay, as far as the Fibonacci price projections, this is how I run what I call the symmetry projections. If you are taking a prior low to high swing and then projecting from a new low, you're setting it up for the possible resistance. And I'm typically using 100% and sometimes 1.618. Bottom line is that you want to use 3 points on the chart so that you're actually comparing swings in the same direction. Okay? And if you're taking a prior high to low swing and then you're projecting from a new high using those same ratios, you're looking for possible support. Okay, so in this first example, this is, now you can apply this to anything, okay? These examples are mostly going to be stocks, but you can also do this on the S&Ps. I do it every day on the S&Ps. So here is an example of a trade setup that we had in Amazon. And what you want to do is take all the key highs and lows on any charts, so I look for the isolated highs and lows. And then I try to run all of the price relationships that make sense as far as the current market activity. What would be relevant to the current market activity? Well, since Amazon was trading down, one of the things would be, well, I'm going to look for support. So I'm going to run a retracement. And there was a 618 retracement, and it looks like a 786. Okay, there was a 618 of the larger swing. And then if you took the next retracement of the slightly higher low to the high, there was a 786 retracement. Okay, and then there's one other price relationship that overlapped here, and that was the projection from 3 points, where I took a prior high to low swing, and this was 8.25 points. And I projected that 8.25 points from this high here, okay, this March 8th high. And we basically came up with a price cluster decision, 179.04 to 180.20. So that's a price cluster. So what you do with that is, if the zone holds, okay, does anybody see the yellow lines? Or is this not working? Okay. All right. You may need to exit and come back. Okay, so basically we have the setup that includes the 618 retracement, the 100% projection, and the 786 retracement. If you hit and hold the area, you look for a buy trigger. Okay, so let's go on to the next slide. Here is where we made the actual low at 180.30.